Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1382A, and today's date is September 19th, 2017, and the title of the episode is The Entire Economic Recovery is One Big Myth. Let's get into the economic collapse financial news. Well, it looks like the retail apocalypse, it is continuing. We see Toys R Us, they went ahead and they did it, and they filed Chapter 11 right now. And there are talks that Best Buy, they might be right behind them. And the Chapter 11 filing is among the largest ever by a specialty retailer. And they have about 1,600 stores and about 64,000 employees with assets of around $6.9 billion. It's the second largest retail bankruptcy. And this is followed by one of the largest is Kmart. And what we're seeing right now is that the retail industry, there are major problems in the retail industry, and it is not happening because of online sales. Yes, online sales are growing, but again, it's only 10% of the entire retail market. What we're seeing here is that people don't have the funds, people don't have the jobs, people don't have the high-paying jobs, people have part-time jobs. The statistical information that we are being fed from the corporate media, from the U.S. government, this has been manipulated year after year after year, and basically what they do is they change the way they calculate everything. And just yesterday we talked about how the everyday wages and income from everyday people, how this has really not gone anywhere, because what they've tried to do is they try to convince us that wages and salaries, they've been doing fine. But really what we're seeing is that they're really not. It's one gigantic myth. Now, consider the following simple timing observation. Real incomes took 17 years to recover from 2000 to 2012. I mean, think about this for a second. We talked about this a little bit yesterday. The Census Bureau data shows that the bulk of the gains in real income in 2016 has been down to one factor: higher employment. In other words, hours worked rose, but wages did not. All they did was manipulate everything. In 1999, the Census Bureau data on household incomes used a different methodology than it does today, and we talked about that. Finally, related to everything that we just discussed, there is a higher degree of volatility in job-related earnings today than in 1999, and there are longer duration of unemployment spells in today's economy than back in the 90s, which means that the risk-adjusted dollar earned today requires more unadjusted dollars earned than in 1999. And guess what? The Census Bureau statistics show not risk-adjusted earnings. The whole thing is completely manipulated to make everyone believe that we are in this incredible recovery, that everything is fine and everything is doing well. Guess what? We've been following this economy for a very long time, and we understand, we know, because we track it every single day, that it has been deteriorating. I mean, think about the bankruptcies that we are seeing now in retail. The whole thing is imploding. And just wait until we get to the corporations, because if interest rates go up, they're predicting right now that 20 to 30% of the corporations, they might have to go bankrupt. Remember, what they're reporting on the stock exchange with their earnings, meaningless. Manipulated numbers, buying back their shares. What you really need to look at is revenue, sales. They can't manipulate that. It's very difficult to do. And if they do, guess what? A lot of people go into jail. Actually, just by manipulating and, modifying the books, there should be many other people going to jail, but that really doesn't happen, especially in the financial institutions and things like that. Now, what's very interesting is that the financial system has been held together so well since 2008, and the reason for this is because of the central banks. They created a bubble in bonds through their QE programs. They've also lowered the interest rates. And if you noticed, this is followed through in Europe, in Japan, and many other areas. Now, as a result of all this, the entire world has gone on a debt binge issuing debt by the trillions of dollars. And we mentioned that the GDP ratio is over 327%. Well, guess what? The real situation is even worse than this. The Bank of International Settlements published a report revealing that globally, the financial system has $13 to $16 trillion more in debt hidden via junk derivative contracts. Now, we discussed this before, and we know derivatives, this is going to be the place where things start to really fall apart. And if we look at all the different times that we had problems in the economy, we are seeing that each time since the mid-90s, the problem has been derivatives. Now, consider that as early as 1998, we know that the Commodities Future Trading Commission, Brooksley Born, approached Alan Greenspan, Robin Rubin, and Larry Summers about derivatives. Born said she thought derivatives should be reined in and regulated because they were getting too out of control. The response from Greenspan and company was that if she pushed for regulation, the market would implode. Fast forward to 2007, and once again, unregulated derivatives trigger a massive crisis, this time regarding the housing bubble. And today, we find out that once again, derivatives are at the root of the current bubble, debt. And once again, the central banks, guess what they're going to do? They're going to turn on the printing presses to paper over the mess when everything starts to fall apart. This is what they've done in the past. This is what they're going to do right now. Already, and if many people have forgotten, the central banks are already printing nearly about 180 billion per month in QE. When the next crisis hits, this is probably going to go to 250 or 500 billion per month. Now, I know the Fed is going to be coming out and they're going to be telling us that, hey, look, we're going to be unwinding our balance sheet. We're going to be raising interest rates. Everything's going to be fine. I mean, they might not say it in so many words, but this is their plan. Now, they might say, hey, we're holding back. We're not going to do much. Maybe we'll be doing this by the end of the year or the beginning of 2018. But they're going to give the idea and they're going to push it out into the public that, yes, this is what we're doing. And they want to see what effect this has on the stock market. They want to see the effect that this all has on the economy. They want to see how people take the news. This is why they do this. Now, if we look at the global stocks, I mean, we've seen that they've risen by 30% or so. And if we look at the GDP growth expectations, well, they really haven't changed that much. Actually, they recalculated them. They were in the negative territory, but they brought them into the positive territory to make us feel that everything is fine. So what changed to make stocks move up? The only thing that changed is the central banks. They created $3 trillion to save the world. So everything goes back to the central bank and their manipulation. This is why the entire economy is a complete myth. This is why when you look at all that is happening right now with retail, GDP, housing, if the Fed unwinds their balance sheet, if they raise interest rates, guess what's going to happen? There's a report, yes, we mentioned this before, that corporations, well, they might go bankrupt, maybe 20 to 30% of them. The housing market's going to completely implode because this is going to throw a lot of people out of the market. And all the credit and the loans and everything for retail and real estate space, commercial real estate, it's all going to come to a screeching halt. They know this. And they know that they created trillions and trillions of dollars and kept the interest rates very low just to keep everything moving along. Now, other countries are realizing that this is a complete and one gigantic myth. So what are they doing? They've been getting out of the dollar. We see this with Venezuela. We see this with China. We see it with Russia. We see it with Iran. We see it with Egypt. We see it with South Korea. We see it with Syria. And many other countries are working with China with the Belt and Road. They're establishing bilateral trade agreements. And they're preparing for what is coming. Now, Putin instructed the government to approve legislation making the ruble right now the main currency of exchange at all Russian seaports by next year. Now, this was floated a couple of years ago and it was shot down. Now, guess what? They're saying, yes, this is something that needs to be done, because what they're going to do is they're going to protect the interest, they're going to protect the dock workers, they're going to protect their assets, they're going to protect everything by switching to ruble settlements. And they need this period of time to transition all of this into the ruble. And we can see right now that they understand, Russia, China, and all the other countries, that the entire system is going to be coming down. And again, the original idea was rejected by large transport companies many years ago. Now they are on board. And basically, the Russian antitrust watchdog said the decision would force foreigners to buy Russian currency, which would stabilize rates and be good for the ruble. And they would bypass the dollar, and they wouldn't have to be worrying about what happens to the dollar. So we can see that countries are slowly, quietly moving away, making plans to make sure that when the entire economic system implodes, they are prepared. This is why Russia and China have been amassing so much gold. This is why they've been creating the separate trading system. This is why they've been duplicating everything that we have here in the West, and they're duplicating it in the East, because they've been preparing for a very long time. If they're preparing, you should be preparing, because they know what's coming. Yes, they're not out there broadcasting it, but they kind of are, because they're showing you that they're buying gold, they're getting away from the dollar, and they're protecting themselves. So they are telling people, not in so many words, but they're giving you some hints of what is going on. And this is why you need to be ready and prepared for what is coming. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.